So let's go ahead and get started. Back by popular demand, today we're going to focus on ARPA. Susan's going to go over several slides talking about the American Rescue Plan Act, state examiner directives and memos that have been issued regarding it. Just talk a little bit about the interim final rule, your local plan that you have to come up with, and yes, internal controls. I'm going to follow up with some common questions that we get asked about ARPA, some other important topics, and then we'll cover some upcoming State Board of Accounts events that we wanted you to be aware of. So with that, Susan, I'll turn it over to you and let you get started.
Well, good morning, everybody. As Todd said, today is a refresher. You've heard a lot of this before, so I'll go ahead and warn you about that. But for all of us, I think our perspective has changed a little bit on the information. And so that might be a little bit different now than it was before. You know, the money's here now, the money's being used now. There's reports that are required coming up soon, or maybe you were one that had to file one at the end of August. So it's a little different perspective than it was before when we talked about it when the money wasn't even here yet. So maybe this go around, some of this information will make more sense, or you might view it a little differently maybe than we did before. So with that being said, let's go ahead and get started, and we'll talk first about the four major categories or purposes of the ARPA money from the State and Local Fiscal Recovery Fund, Section 603. And you can see here on the slide, there are four main categories. The first one is costs incurred to respond to the public health emergency or its negative economic impacts, including assistance to households, small businesses, not-for-profits, or aid to impacted industries. Secondly, funds can be used for costs incurred to respond to workers performing essential work during the COVID-19 public health emergency by providing premium pay to eligible workers that are performing the essential work, or for eligible employers. Thirdly, it can be costs incurred for governmental services, which is limited to the amount of revenue reduction, and we'll talk about that when we get to that category. And then lastly, costs incurred to make necessary investments in water, sewer, or broadband projects. Now, these four categories, these are the foundation for spending money under the American Rescue Plan Act. But remember that that act was written for all 50 states and all metropolitan cities and all non-entitlement units across our nation. So it's a very broad foundation, because even here in Indiana, you know, all of our cities and towns are different, and all of our cities and towns have different needs. So I think it was meant to encompass all of those needs. And that's why your local plan is going to be so important, because your local plan is going to talk about the specific projects that are needed in your city or town to undertake those goals and objectives of the American Rescue Plan. So let's talk about each area a little bit more specifically. Next, yeah. This first slide, this is the first category, costs incurred to respond to the public health emergency or its negative economic impacts, including assistance to households, small businesses, not-for-profits, or aid to impacted industries such as tourism, travel, and hospitality. Now, we want to make sure that we notice the key words here in this section, and that is a response to the public health emergency or its negative economic impacts. That is what this particular section is all about. If you're going to use money in this category, then you're going to need to do some assessments according to the interim final rule. What you need to ask during those assessments are there ways in which your city or town needs to respond to the public health emergency, or is there ways that you can respond to that negative economic harm? So first of all, you're going to need to identify a need. For example, maybe your city or town has a low vaccination rate and you need to do something about that. Maybe you need more contact tracing, or maybe you need more personal protective equipment. Maybe there's households that need your assistance in your area. All of these would be the different needs or types of economic harm that you might be incurring in your city or town. And then you're going to identify how the program that you want to put in place or other intervention addresses that need. And when you fill out your reporting in October, I think you're going to term that as a project. So whatever your program is, you're going to describe that as a project in your reporting, and we'll talk about that more later. And then if there's programs that you have or projects that are addressing economic harm, then you'll need to figure out the connection between COVID-19 and that economic harm. So these types of assessments are going to be needed to document how the costs incurred accomplish the goals of the American Rescue Plan. And what are the goals? You can find those very easily in the interim final rule. It's by it's broken down by these 4 categories, and there's a lot of explanation in there about what the goals of the American Rescue Plan Act, those 4 major categories. There's a lot of information on those goals for each category. So if you haven't read that for a while, you might want to go back and take a look at it again. As you read through the interim final rule, you'll find a lot of non-exclusive lists of things that you might want to do in these various categories. You can certainly follow those lists exactly, but remember, those were written for all governments across our nation. So you might have something that's similar but different to those lists, and that's okay. They're non-exclusive lists. Just make sure that you document that the project that you want to put in place meets those goals and objectives of the Act. The key is going to be documenting the identified need and how the program addresses that need, and then a connection if there's economic harm. And ideally, if you could, this would be part of your local plan. Now, in addition to those non-exclusive lists that are in the interim final rule, I won't go through those today, but there are certain types of services that are presumed eligible under the plan if they're in a qualified census tract. And that is defined in the interim final rule having to deal with income levels in your area. So certain additional things like building stronger communities by investing in housing and neighborhoods, addressing some educational disparities, or promoting healthy childhood development, like maybe childcare or training on child development and those sorts of things. Those are additional things that you might want to consider doing and presumed eligible if you're in a qualified census tract. If your city or town is in a qualified census tract, then just make sure to confirm those definitions in the interim final rule and document that source of information. If it's in your plan to provide grants and programs to respond to the public health emergency or negative economic impacts, then make sure you have a written agreement with the recipient to document the transactions, and then an explanation again of how it meets the goals of the ARPA. And as always throughout this presentation, you'll want to make sure that you set up internal controls to make sure that your assessments and your documentation and your contracts are all in place for each disbursement under this section. All right, on to the second category. That relates to the provision of premium pay for eligible workers or grants to eligible employers. Now, when you're in this section, one of the biggest things that you have to think about is the definitions. Every bolded word that I have there, or that's in the Act, essential work, premium pay, eligible workers, eligible employers, all of those words are defined in the interim final rule. So before you make any decisions in this area, you need to know what those definitions are and if the premium pay that you're considering meets those definitions. And I would encourage you to document this as well and make that part of your internal control system to make sure that you have documentation that it does meet the definitions in the U.S. Treasury information, because you're going to need that to back up the amounts that are being paid. You also need to be aware that this section contains a few limitations. For example, if you have to provide written justification if the amount paid to a particular employee goes above a certain threshold, and that's the average annual wage of the state or the county. So you need to keep track of that and know what that threshold number is. Also, the amount of premium pay cannot exceed $25,000 per worker. And very importantly, for the interim final rule, premium pay or grants provided using these funds should prioritize compensation of lower income eligible workers that perform essential work. The goal is to address low-income workers who have been providing services in person during the public health emergency. And as always, you should maintain documentation and explanation that the premium pay meets definitions and the requirements of the ARPA and the interim final rule. So you'll want to look through all of those definitions and make sure you have all of that set forth. Now, there's also provisions for eligible employers, and that also is defined in the statute who an eligible employer is. If you do decide to do that, then disbursements to grantees does need to be documented in a written agreement. Okay, on the third section, funds can be used for costs incurred to respond to workers performing essential work. I'm sorry, I need to go to the next one, Todd. There we go. Funds can be used for costs incurred for the provision of government services to the extent of the reduction in revenue due to COVID-19 public health emergency, relative to the revenues collected in the most recent full fiscal year prior to the emergency. Now, there are a couple of things that you're going to want to consider here as well. First of all, you have to find out how much you can spend in this category because the amount is limited to the revenue reduction. And that's what this slide is covering. The types of revenue that are included in this definition are stated in the interim final rule and the Census Bureau's annual survey of state and local government finances. So you can start with those definitions in the interim final rule and look through the frequently asked questions to find out more information on that. We also have put out some guidance on this that Todd's going to talk about a little bit later in his section. So you'll want to see that on our website. But when you're doing the revenue calculation, certain things are going to be included, like taxes, current charges, miscellaneous revenue, intergovernmental transfers between state and local governments, not federal governments. Certain items are going to be excluded, like refunds and correcting transactions, proceeds from the issuance of debt or the sale of investments, revenue generated by utilities. That caused some confusion in the beginning. Utilities, for purposes of the ARPA, is defined as electric, water, gas, and public mass transportation. So those four categories you would not include in the calculation of revenue. And you also do not include transfers from the federal government. So, as you can tell, it's not just as easy as pulling your total revenues from the AFR and comparing it between years. You actually have to do some analysis by each fund to include or exclude items according to the Act. As I said a few minutes ago, Todd's going to have more information on this in his section and where you can find out where we have some more guidance on that subject. As with anything under the ARPA, you'll need to maintain documentation, what was included in your calculation and what your calculation arrived at. Okay, on the next slide, that deals again with the revenue reduction still. The interim final rule does contain a non-exclusive list of government services that can be used under this category. And also there's some additional information in the frequently asked questions section on eligible uses. You'll find that both the interim final rule and the frequently asked questions, there's an emphasis on costs incurred for government services that have a direct provision of service to citizens. So that is an important goal of the ARPA. So read through this section of the IFR and get a handle on what's expected in this area. Some things are ineligible per the interim final rule, things like transfers to the rainy day fund or costs for the issuance of debt. So you're going to want to familiarize yourself with those ineligible items as well. And they're discussed in the frequently asked questions too. You do want to maintain supporting documentation and explanation as to how your expenses related to government services meet the goals and definitions of the ARPA. And remember again that those lists that are provided are non-exclusive lists. So if you're going to provide services that are not on the list, that's okay. Just make sure that you have a detailed explanation of how it fits those goals. Okay, and then the final category we have are funds can be used for costs incurred to make necessary investments in water, sewer, or broadband infrastructure. For water and sewer, you're going to make sure that you have eligible projects per the Clean Water or Drinking Water SRF publication, and those are noted here for you. For broadband infrastructure, the interim final rule has a very detailed explanation. There's a few other key points that you also need to be familiar with on this plan. We've had several questions related to interest, and Todd's going to cover that in the next section. We've also had questions on pension funds. You cannot make a deposit to pension funds with ARPA money. And also you can make certain transfers to the state or other special purpose governments. But you'll want to read through section 603C3 to find out more about that and when that's appropriate. Also, ineligible uses are in the interim final rule and frequently asked questions section. You'll especially want to look at section 8. You can have prior costs incurred prior to the receipt of the money. You can cover those costs back to March 3rd of 2021. And then funds can be used to cover costs incurred or obligated by December 31st of 2024. And really just let that sentence sink in just a minute. This is a very long-term grant. The funds don't even need to be obligated until December 31st of 2024. And if they're obligated, the period of performance, or they don't have to be expended if they've been obligated until December 31st of 2026. So again, that's why your local plan is so important to all of this. It's also why it's so important to keep documentation of everything and all of the decisions that have been made. And so you want to keep that in mind, that this is long-term. Okay, on the next slide, there are several key documents that you're going to want to keep handy with this. The first one, of course, is the Act, Section 603, that has those major categories. The second one is the interim final rule that gives a lot of explanations of what the goal is for the ARPA. The third, Treasury frequently asked questions. There are a lot of questions that I know all of you have had that are addressed in that document. All of those are available on the Treasury website. And then there's one additional document that I should have listed there, and that is the compliance and reporting guide. And I'm going to talk about that separately in a few minutes, but that also is a very important publication from the Treasury. And then, of course, you have the Board of Accounts Uniform Compliance Guidelines, the State Examiner Directive 2021-1, which talks about how you're supposed to account for the ARPA money. That also is detailed in the accounting processes for ARPA dated May 12th. We have a separate memo on interest earned on the ARPA funds of June 15th. And then, of course, we have our city and town bulletins and our internal controls manual that you will want to take, keep on hand and reference as you're working through this grant. Also, the uniform guidance, the address for that information is there. It's also talked about really well in the reporting and compliance guide section 1. So you might want to take a look at that. I'll talk more about that here in a minute. And Todd has also done at least a couple presentations on the uniform guidance requirements. So you might want to go back and watch a couple of those. And then, of course, your local plan. Again, this is such a long-term grant, and the projects are specific to each city and town, so your local plan is really of utmost importance. year. Okay, on the next slide, just wanted to talk a little bit. Most of this is in the state examiner directive and that accompanying memo that was on the previous page. I'm sure all of you probably know this now, but this is a review, so we'll just talk about it briefly. ARPA money is supposed to be put into a separate fund. It should be the fund name ARP and then the name of the grant, state and local fiscal recovery funds. Fund number range is 176 to 199. The fund should be established by ordinance, and the ordinance should specify the uses in accordance with Section 603. That would be those 4 major categories that we talked about at the very beginning. And then your ordinance should also reference your local plan that will provide the details for the use of the funds. Now, some people have asked us if the local plan has to be done at the same time as the ordinance, and it's been our audit position that it does not, but your local plan should be in place before you start spending the money. As far as the transactions are concerned, the money should be appropriated by council before use, and Todd's going to talk about this more in his section. Disbursements do need to be made directly from the ARP fund through the normal claims process with adequate supporting documentation. That's, the Indiana Code statute that you follow for all of your disbursements. Disbursements do have to comply with the ARPA and the interim final rule. And then money may not be transferred to another fund. So hopefully you're familiar with all that, but again, there was a review of that. Key documents that our field examiners are going to need in the audit would of course include your ordinance and local plan. Then they're going to need your written internal control procedures, and we'll talk about that a little bit more in a minute. Make sure, as we always say, have evidence that your internal control procedures were followed to show that, yes, somebody did review something, or somebody made sure that an eligible employer met the definition, or however that might work in your system. Just make sure there's evidence that that job was done. You'll want to document your costs incurred and then your explanations of costs in accordance with 603, the interim final rule, or the Treasury guidance. Some places our field examiners will look for that would be board minutes. They'll look for attorney opinions if you provide those, or your notes, and whatever they can find. Anything you've got, they'll probably want to see that for audit. Okay, on the next slide, I wanted to talk about internal controls for just a minute. Internal controls do need to be designed, implemented, and documented to provide reasonable assurance that the ARP funds will be safeguarded and used in accordance with the ARP. Each of the 5 components of internal control is necessary to form a complete internal control process, and you can find those in the Uniform Internal Control Standards for Indiana Political Subdivisions, or the Board of Accounts, and the State Board of Accounts Best Practice documents. Now, if you'll remember, and I'm not going to go through them in detail, but those 5 components are control environment, risk assessment, control activities, information and communication, and monitoring. So each one of those should be addressed in your internal control system. Having separate funds, maintaining records, and detailed comments that provide audit trails, appropriate approvals, and so forth are all part of a good internal control system. I wanted to go, that's what we've had to say about internal controls, and I wanted to go through too what the U.S. Treasury has to say about internal controls, specifically in regard to the ARP money. And this information came from that reporting, compliance and reporting guide. Again, I'll tell you where to find that here in a minute, but here's what it said about internal controls. Recipients should ensure they maintain proper documentation supporting determinations of costs and applicable compliance requirements, and how they've been satisfied as part of their award management, internal controls, and subrecipient oversight and management. Your organization must develop and implement effective internal controls to ensure that funding decisions constitute eligible uses of funds and document determinations. Recipients must implement robust internal controls and effective monitoring to ensure compliance with cost principles, which are important for building trust and accountability. And your organization should also develop and implement internal controls related to activities occurring outside the period of performance. So you can see that internal controls are very important to the U.S. Treasury when it comes to these funds. So make sure that you get all of those written down and again, provide evidence that they were performed. If you have any questions about that, you can always feel free to call us. And then on the next slide, just to kind of reiterate the U.S. Treasury expectations, it is to ensure public trust. The Treasury expects all recipients to serve as the strong stewards of these funds. This includes ensuring funds are used for the intended purposes and recipients have in place effective financial management, internal controls, and reporting for transparency and accountability. So just to summarize that section then, make sure that now that the money's here and it's being spent and being accounted for, make sure that you're accounting for costs incurred in accordance with the state examiner directive and those memorandums. Again, make sure you have written internal controls and evidence that the controls are being followed. Have a detailed local plan. Document all costs incurred and relate those back to the local plan and the ordinance and the ARPA. Explain your costs incurred under Section 603, the interim final rule, and other Treasury guidance. And then there's that summary again that is expected from the Treasury. Okay, and then just on the last couple of slides that I have, I wanted to talk about the Compliance and Reporting Guide for State and Local Fiscal Recovery Funds. This is also a U.S. Treasury publication, and you can find it at the addresses there. There's the guide, and then they also have some webinars available on the website. I don't know if it's easier to type in this long address or just go to the U.S. Treasury website, and you'll be able to find it. If you click on the State and Local Fiscal Recovery Funds section, then all of that's available there for you. In addition to the Act itself, this document is, I'm sorry, Ty, can you go back one? I paused. I just want to kind of talk about the structure of this guide for a second. The first section of this guide is general guidance that walks you through the key principles of ensuring that funds are used for the eligible purposes of the Act in an efficient and effective manner. It also has an emphasis on transparency and accountability, and it emphasizes that recipients are responsible to ensure funds are in compliance with the Act. So that's another reason, again, why it's imperative to keep good documentation. It also goes through the 4 main categories and explains that the interim final rule is a framework for determining how an expense fits within those categories. And again, it explains that documentation is key. The uniform guidance administrative requirements are also set forth in this first section. These again are the ones Todd's talked to you about these in the past meetings, but if you'd like to read through here, it's a nice short summary of those requirements and things that you should know about that. Things like allowable activities, allowable costs, period of performance, and so on. So there's a lot of information, a lot of information to review in part 1 of this guide, so make sure you take a look at it. The second part deals with reporting requirements. The Treasury has put out some videos on reporting, so you'll want to take a look at those on their website. And again, the address is there for you. And I want to talk a little bit more about the reporting. So now I'm ready for the next slide. This came out of that publication, and it tells us when the reports are due and what reports are due. Some of you had to do a report by August 31st. Metropolitan cities had to do that. The project and expenditure report is up next for October 31st, and that's for everybody. Everybody has to do that. So that's what we're going to talk about on the next slide. The project and expenditure report, again, is due October 31st. So I wanted to give you a brief idea of what to expect with that report. Make sure that you do watch the U.S. Treasury videos on this and look through the guide. You do need to think when filling out this report, you need to think in terms of projects. because you're going to be asked to describe your projects in the report in a, I think it's 50 words to 250 word description. So for yours, maybe one of your projects might be setting up a COVID testing site. Maybe it's setting up a vaccination area. Maybe it's providing premium pay to essential workers. Another project might be to increase broadband capacity. Those would all be different projects that you might undertake as a part of the ARP funding. So they're going to ask you to define each one of those projects. And then you're going to need to align the expenses that you've incurred for these projects in the appropriate expense category in the appendix. For example, a major expense category might be public health, and that would be category 1. COVID-19 testing would be subcategory 1.2. So you'll want to be thinking about that, and all of those expenditure categories are listed in Appendix 1 to this guide. So you'll want to familiarize yourself with those now so that you can make sure you're ready for that October 31st report. You'll also be asked for information on how much money has been obligated for each project and what the expenditures are so far and the status of the project. There's certain information they're going to want to see if it's targeted to economically disadvantaged communities. There'll be information requested on any subawards that you might have. They do have a civil rights compliance section, and they also have a required programmatic data section, which is on pages 19 through 22 in the report. The type of information that's required here is going to depend on how you described your project and your expense categories. For example, if one project is for payroll for public health and safety employees, then you're going to need to provide the number of employees that responded to the COVID-19 emergency or are responding. If you're providing small business economic assistance, then you're going to need to describe the program that you have, the number of businesses served, and your approach that ensures that the aid responds to the negative economic impacts of COVID-19. So that's all information that, again, you need to review these programmatic data section in the guide so that you have an idea of the information that you need to gather now for when it's time to do the report. And then on the next slide is just some information, from our agency, the Indiana Finance Authority, and of course the U.S. Treasury, and of course AIM and the National League of Cities has a lot of information for you as well on how to handle the money from the American Rescue Plan Act. So with that, I'm going to turn it over to Todd for his section, starting out with some frequently asked questions.
These are questions that we've received by email or phone over the last couple of weeks to a month or so, and we just want to cover those and give our positions on them and what we think is required or that you would need to do. The first one is, can we use ARPA money to purchase or provide? And then the question goes into something very specific. When the Board of Accounts has been asked specific questions, for example, can the money be used to purchase or to construct a new town hall? That was one that we got. Our answer is to recommend reviewing the American Rescue Plan Act and the interim final rule with your attorney to see if your particular need is covered in the permitted uses, goals, and objectives of the Act. Those documents, along with the FAQs on the Treasury's website, can provide a lot of information. The Treasury's also released webinars on the uses of these funds. You can, again, find those on the Treasury's website. And I think those are very useful. If you have if you looked at those and you still don't have an answer to your question about if it's an allowable use or not, you can always address a specific question to the Treasury by emailing slfrp@treasury.gov. I'll say that again, but it's also on their website that you can find it. It's slfrp@treasury.gov. So what do you want to include in the revenue calculations? Well, first of all, you want to check out the video that Susan and one of our other directors factors are recorded on the revenue calculation. It's on our YouTube page at the link that's shown on the slide. There are also some charts and a diagram on our website. The link shown will get you there, or you can go to our homepage and look under COVID-19 resources. There are links there that talk about these documents too. And the Treasury also has information in their FAQ appendix. So while you might have read through the FAQs on the Treasury's website, check out that index or that appendix because it has some good information as well. Revenue sources to be included are general revenue, which is intergovernmental revenue, but not federal grants. General revenue also includes taxes, licenses and permits, charges for services, earnings on investments, and so forth. There are certain other revenues that should not be included, like money from federal grants, the sale of investments, you don't want to include that, proceeds from borrowing, refunds and reimbursements, clearing account transfers, and interfund loans. Utilities are not to be included as revenue sources, but you first have to know how ARPA defines utilities. ARPA defines utilities as water supply, electric power, gas supply, and public mass transit systems. And Susan talked about that earlier as well. If you've got revenue in one of those categories, you would not include it. If it's something else like sewage or solid waste, you can include and you will include those fees. We've had some questions too on what to do if revenue fluctuations occur, like some years they receive a certain tax distribution and other years they didn't. That should still be included in your revenue in the years it's received. Another question is, how do we handle eligible ARPA expenses incurred before we receive the distribution? Well, permitted expenses incurred in a fund after the passage of the ARP Act, but before the receipt of the funds can be shown as an expense in your ARP local grant fund. And then we give an example. If on March the 12th of 2021, a city incurred expenses of $10,000 from their general fund that did respond to the public health emergency, that city can transfer that expense to the ARP fund through a reversing entry. And you've probably heard us talk about doing that. We talked about that with CARES as well. The city will first reverse the $10,000 expense in the general fund, and what that's going to do is it's going to reinstate or bump up that expense appropriation line item in your general fund, and it will also bump up the cash balance of your general fund. You'll then post that $10,000 disbursement in this example to the ARPA fund with a link to the original claim and that supporting documentation that Susan talked about that you're going to need there too. What would you do if ARPA eligible expenses were paid out of another fund? Well, assuming the expenses comply with the act itself and your local plan, you can do a correcting entry by reversing out the original transaction and posting it to your ARP fund. Again, reversing that original entry is going to restore or bump back up your line item appropriation balance to the line that it was originally charged to. And again, you need to retain all your supporting documentation of that original entry that was transferred to the ARP fund and keep that with all of your grant paperwork. And that expense must be on or after March the 3rd of this year, 2021. We had a lot of questions about the appropriation process for these funds. And that process is for the ARPA fund is the same as for any other of your home ruled fund and as defined by DLGF. So there's a statute to consider here, and it's Indiana Code 6-1.1-18-5D. So according to that statute, a political subdivision, city or town, may make an additional appropriation without approval of DLGF if the additional appropriation is made from a fund that's not described under subsection B. However, the fiscal officer of the political subdivision shall report the additional appropriation to DLGF. So it's our audit position that the ARPA fund falls into that category of, quote, a fund that's not described under subsection B. It's pretty much any of your home ruled funds or funds that you don't have, that you've created by home rule, that they don't have a levy on them, but you still are appropriating them. So to use the ARPA funds this year in 2021, you're going to want to follow the additional appropriation process that's outlined in Indiana Code 6-1.1-18, which is described in more detail in a memo that DLGF issued. It's titled The Additional Appropriation Submission, Department Review Procedures, and Other Related Topics. It's dated February the 5th of this year. There's a link on the slide. You can find it on DLGF's website too. You can go there and search additional appropriations in their little search box, and this information comes up pretty quickly. Basically, you're going to go into Gateway and do the additional appropriation portion of it, provide the necessary information, and then submit it. It's the same process as if you need an additional appropriation for your general fund. The difference with ARPA additional appropriation, though, is DLGF's response. In this case, they're going to acknowledge receipt of your additional, but they're not going to approve it. So that's different than if you did a general fund additional. You would go through those same steps, and then they would approve or deny it. Additional appropriation procedures for home ruled funds require public notice, a public hearing, and then the reporting to DLGF. And that ARPA fund is considered a home ruled fund for DLGF purposes. So we got that question a lot. Do we have to go through the notice and the hearing? It's our position that yes, you would. We've had some questions from people who aren't planning to use the money this year, but they're going to use it next year. And what would they do? So to use ARPA money in 2022, it's our understanding that the ARPA money should be included in the normal budgeting process for next year, including the advertisement and adoption of appropriation. And as with any appropriation question, if you have any further questions on how all of that works for ARPA, you can always contact your local DLGF representative. Is there a specific deadline to appropriate the money? No, there's no specific deadline, but council would need to approve the additional appropriation prior to any of those ARPA funds being spent. So that's important to keep in mind, that while there's no deadline, and Susan talked about, you can expend or obligate these funds by the end of 2024, and if you obligate them and they still remain then, you've got another couple of years. The important thing to remember is before you start spending them, there needs to be an appropriation in place. We've had questions about the proper receipt code for the ARPA funds. And R134 federal grant distributions would be appropriate. So this little screenshot is from that listing. If you go into Gateway, the fund codes and the receipt codes and the disbursement codes, R134 would be appropriate, just as other. You don't need a separate bank account for ARPA money. I had that question quite a bit early on. I know there are some grants that do require that, but ARPA is not one of them. So you can keep it in any one of your existing bank accounts. If you want to create and establish a new bank account for just this ARPA money, you can do that as well. And how do we account for the interest, and does it have to be deposited into the ARPA fund? Well, if you go back several months before we had specific guidance, we said in one of these webinars that you could prorate the interest that you receive for a month in your checking account and prorate the portion that was ARP and put that in the ARP fund. You don't have to do that anymore. There's a little bit of confusion on that. Some people heard that part, but not the second part, which was when the Treasury came out with specific guidance. And they said the interest is not required to go in the ARP fund or to be used for ARP purposes. So what you're going to want to do is account for your ARP interest as you would interest prior to even having the ARP fund. Most places that's probably depositing it or receiving it into your general fund. But there is a statute even that talks about interest on investments and deposits, and you want to look at IC 5-13-9-6. There's also more information in the September Cities and Towns Bulletin, which we just sent out maybe a week or 10 days ago, and I know it's on our website too if you didn't see that. Some people are putting their ARPA money in Trust Indiana investment, and a question that we had dealt with using Keystone accounting software. If you've got Keystone, you know it doesn't allow you to attach more than one fund or more than one bank to a fund. So the question's been, what do we do in that case? Is it okay to have two funds? And our position is we won't take exception if you have two ARPA funds because one of them is money invested in Trust Indiana and because you have Keystone as your accounting software. But you're going to have to keep good documentation of how this occurred, why you created that separate fund, and make it that each fund name is easily identifiable, like Susan talked about using ARP in the title. For your second fund, if it's Trust Indiana and Keystone, you might call it ARP Trust Indiana or ARP Investment or something to that effect. The biggest thing to remember is when you get to reporting on your annual report in a few months, those two funds need to be presented as one, because on the annual financial report, everything is your cash and investment balance at the beginning of the year and your cash and investment balance at the end of the year. So if you set those up as two separate funds, remember to just on your ledger, in Keystone, remember to just show those as one fund on your annual report. What fund number should be used for the ARPA fund? As you've probably heard us talk about before, we're in the process of revising those chart of accounts for the fund numbers. So currently, you're going to want to use a number in the range of 176 to 199. If you remember back last year to CARES, we used 150 to 175 for CARES. Now for ARPA, it's 176 to 199. So any fund number in that range that you want to use or that you have available, you can use it for the ARPA fund. When we start next year, that range is going to change, and you'll want to use a number that's 2401 to 2499. That range, 2401 to 2499, is a range that's set aside for grants, and so your ARPA fund will go in that area. I had a few questions about an ARPA grant for the city and for their airport. And in a couple of cities that had airports, they got an ARP grant. They wanted to know if they could keep those in just the one ARP fund, and know that each of those grants should have its own separate fund. Here's a question of if we can provide premium pay in the form of bonuses to employees under ARPA. Well, our position is that ARPA funds can be used to compensate eligible workers that are performing essential work with, quote, premium pay of up to $13 an hour, in addition to their wages they would otherwise get. As Susan mentioned earlier, that premium can't exceed $25,000 per eligible employee. So while we believe eligible workers can be paid premium pay, what we've seen so far from the Treasury is no mention of the word bonus. It doesn't appear in the interim final rule. So our position is ARPA could not be used for bonuses. It can be used for the premium pay at an hourly rate, but not just a flat type of bonus. So if a city or town paid bonuses, you'd have to come up with that money from another source. And of course, you'd want to amend your salary ordinance in any event. And we've included a link for specific information on ARPA premium pay in the interim final rule section B. If you would click on that link and check that out, what it calls for there. And to piggyback on this question, we've had a few about elected officials. If they fall into that determination of premium pay because of essential work. Just remember, because of the way the statute's written, you would not be eligible for that this year because your compensation can't be changed during the year in which it's fixed. You could get it for future years if your salary ordinance provided for it, but you couldn't get it now. That's the big takeaway from that is you couldn't get it now. A lot of people have wondered what the CFAA number for ARPA is. It is 21.027. But as we talked about at the fall district meeting, I think, that number is changing, or that name or acronym is changing. It's not going to be CFAA number anymore. It's going to be ALN number. And ALN stands for Assistance Listing Number. So the number's staying the same, just what the feds call it and what it'll be referred to in the annual report going forward. And on your schedule of federal expenditures is going to be the ALN number. Can ARPA money be used as a match for SWIFT, with SWIFT meaning the State Water Infrastructure Fund? And per the Finance Authority, cities and towns can use the allocation of ARP funds as a source of co-funding a SWIFT grant. And you may have heard us talk about there are prohibitions on using ARPA funds as a match to some federal grants. SWIFT isn't considered a federal program, and a match of local funds is not required. So you could use your ARPA as co-funding a SWIFT grant. And we won't take audit exception to doing that. If those activities, if those SWIFT activities are ARPA allowable and part of your ARPA plan. If a city or town spends more than $750,000 in 1 year, does that initiate a federal audit? Yes, that $750,000 is the threshold. If you spend more than that in a year, that triggers a federal audit. And if you spend less of that in a year, a federal audit's not required. When does the local plan have to be completed? Well, the establishing ordinance should address the permitted uses of the ARP fund by identifying the 4 broad categories under Section 603 and referencing a more specific local plan for the use of these monies within the parameters of the ARPA. It's not required that the local plan be included as part of your ordinance or that it be completed before the passage of the ordinance, but it should be completed before the dispersing of money out of the fund. That only makes sense because how can you spend that money if you don't have a plan for it yet? So council needs to adopt the plan. They need to set the appropriations like I mentioned a few slides back, and then you can start spending that money. And that local plan that we've talked about before, you know, it's fluid. It can change because your needs are going to change. And we've talked about the length of time that you have to use these funds. Things are going to maybe change, and that plan can be amended. Once it's set, it's not, you know, set in stone that you can go back and amend. Well, council can go back and amend that as necessary. Had a few questions within the last week on what is IDME. I think that went out on the listserv and it caused more and more questions. IDME is a technology partner to multiple government agencies and healthcare providers, and it provides a secure digital identity verification to governmental agencies and healthcare providers to make sure that you're you and not someone that's pretending to be you when you request access to online services. We reached out to AIM, and they were very helpful in providing some information to us, and per Campbell Rickey with AIM, here's what they know at this time regarding IDME. Metropolitan cities are going to have to register a responsible party through IDME to verify the identity of the person that's submitting ARPA reports. It's not clear right now if non-entitlement units will have to do the same. It's probably likely that you will if you're a non-entitlement unit, but that clarification hasn't been made yet. So if non-entitlement units end up being required to be registered, Campbell said that AIM plans on conducting a webinar to walk their members through that process of applying and registering in ID.me. What kind of documentation are you going to need for audit? Well, of course, just like with any other claim that you pay out, you're going to need a detailed invoice or a contract, a written contract. You're also going to need the assessments that are required by the interim final rule. As an example, how costs incurred responded to the COVID-19 public health emergency. And Susan mentioned this earlier too in her portion. We're going to look for that kind of information maybe in board minutes or written legal opinions. Those are going to go, written legal opinion from your attorney is going to go a long way in helping us during an audit. And then any other notes that you might have. We've had very few questions about if you need a separate set of internal controls for the ARPA fund. A separate set of internal controls isn't required. However, you are going to be expected to have additional controls that are related to specific ARPA activities. An example might be of an additional control would be on your premium pay. You should have controls in place for determining which employees receive the premium pay. There should be controls in place for monitoring how they are paid at the approved rate. You know, maybe some employees have a different premium pay rate than others. You know, it can be up to $13. Maybe some people get $10 an hour extra. Maybe some get 12. Well, you're going to need to have controls in place to ensure that the people that are supposed to be getting the 10 get the 10 and not the 12, and vice versa. Or if you're dispersing ARPA money to local businesses or not-for-profits, what's your procedure for determining who's going to get that money? Is there an application process? Who's going to approve that? Who's going to monitor to see that if business A gets $5,000, how are we going to monitor to ensure that they got $5,000 instead of $55,000? So you should have controls in place to provide the objectives of the ARPA are being met, and in order to obtain accurate information that's going to be required for that federal reporting that Susan talked about, describing not only what you spent the money on, but what your projects are, where you are in that project, if you're completed or halfway. You're going to need to know that information for those reports, so you need to have controls in place to ensure that you get accurate information in order to file those reports. That's kind of it on the ARPA questions. We still have some on CARES. So I'm going to switch gears a bit and talk about CARES. We are finding that people still have money in their CARES fund, and you should not have any money in your CARES fund. It should have a zero balance. If you remember, the state examiner issued Directive 2020-3 back in October of 2020, October 22nd, actually. It contained the accounting procedures for CARES, and it had a couple of scenarios based on what your reimbursements were for. You might remember that document had options and frameworks in it. The first area was if you were getting CARES reimbursements for your public health and safety payroll costs. And if that was what you were getting your reimbursements for, you had a couple of options. Option number one was you'd already spent the money and you reversed that entry into your CARES fund. Then when you got the money into the CARES fund, it would zero it out, and obviously no money would be left. They would have a zero balance. Option number two under that was you ended up with money still in your CARES fund, and then council was supposed to transfer it to your general fund. Then it could be appropriated and spent for whatever purposes council appropriated it for. Again, that would result in no money remaining in your CARES balance, in your CARES fund. The other thing that you could get CARES funded were costs that were other than public health and safety costs. And in the directive, there were three frameworks. Framework number one was the original cost was reversed out of another fund, posted to your CARES fund. The reimbursement comes in, no balance in your CARES fund. They zero each other out. Framework number two If reimbursement was based from IFA was based on purchase orders, in other words, you hadn't expended that yet. Remember, they were doing that. You could turn in a purchase order and get reimbursement. That disbursement would come from the CARES fund, and the reimbursement would go into the CARES fund, and it would have to match. The reimbursement and the expense would have to match, resulting in no balance in your CARES fund. And then framework number 3, if you had spent money directly out of the CARES fund and you had a negative balance because that money hadn't come in yet, the receipt reimbursement would go to that CARES fund, and it would, any guesses out there? It would zero out. So you'd have a zero balance. So all of those 5 different examples, the 2 options and the 3 frameworks, result in your CARES fund having a zero balance in it. If you're one of the cities or towns out there that you happen to have a cash balance in your CARES fund currently, and that money was for reimbursement of public health and safety costs, we would recommend council authorize a transfer of the balance of the cash balance in that CARES fund to the unappropriated cash balance of your general fund. If your balance is a result of a reimbursement of specific expenses which were not public health and safety payroll costs, we'd recommend council authorize a transfer of the amount to the unappropriated cash balance of the funds which originally incurred those costs. So again, if you have any more questions on that, you can shoot us an email or give us a call and we can talk about it. That kind of concludes our question and answers on ARPA and some things on CARES that we wanted to talk about. Here in a second, we'll go over the questions that you've submitted. But first, wanted to talk about some upcoming events. The first one is the AIM Ideas Summit. It's going to be in French Lick this year. It's October the 5th through the 7th. And if you go to that, the Board of Accounts will have our resource table there on October the 6th. If you've been to that before and have seen our resource table, we are usually set up right across the lobby from the conference registration desk, not the where you check into the hotel part, but where you get your name badge and your goodie bag for the conference. We're usually right across the lobby from that at a table. It'll be myself and Susan, and I think Debbie Gibson from our office will be joining us there, and our board will be in attendance on that day, mingling around, talking to you. If you've got some issue you want to raise with the state examiner, feel free to grab him if you see him, and you can talk about that with them, or you can stop by the resource table and talk to us. The next thing is the League's annual conference and Board of Accounts School. This year it's going to be in Evansville on November the 7th through the 10th. The Board of Accounts Day is going to be on Monday, November the 8th. We are currently working on that agenda. Had it pretty much, I thought, ready to go, and then we've had a couple of movements, one cancellation that now has been switched to maybe a virtual presentation due to COVID, but we'll get that nailed down here in the next few weeks and get that sent out to you as soon as we can. And finally, our last monthly webinar for the year is going to be right before Christmas on December the 15th. So be looking for the invitation for that around the 1st of December or so, where that email comes out for your WebEx meeting, and we'll look forward to wrapping the year up at that time. So here's our contact information if you don't already have it. And I'm going to stop sharing my screen here, and we can get to the Q&As.